What if I told you most traders arguing about price action versus SMC don't actually understand either? One says, SMC is just rebranded price action. The other says, retail price action doesn't work anymore. So today, I'll break this down in the simplest way possible. No hype, no bias, just clarity. And by the end of this video, you'll know exactly which one fits your trading style. Let's start simple. Price action is the study of pure price movement. No indicators, no complex theories. Just support and resistance, trend structure, breakouts, pullbacks, candlestick patterns. It answers one core question, right finger. What is price doing right now? If price makes higher highs and higher lows, trend is bullish. If it breaks support, potential shift. Clean, direct, reaction-based. Now let's talk about smart money concepts. SMC is built around the idea that right finger institutions move the market, banks, hedge funds, big liquidity players. Instead of just reading structure, SMC focuses on liquidity, equal highs/lows, order blocks, fair value gaps, break of structure, BOS, change of character. CHOCH. It tries to answer, right finger, where are institutions entering? So instead of buying a simple breakout, SMC traders wait for liquidity to be grabbed first. It's more narrative-driven. Now let's compare properly. Keycap 1 philosophy. Price action equals market moves based on structure and momentum. SMC equals market manipulates retail traders before real move. Keycap 2 entry style. Price action trader sees breakout right pointing arrow, enters continuation. SMC trader waits for fake breakout right pointing arrow, enters after liquidity sweep. Keycap 3 complexity. Price action simple to understand, hard to master. SMC complex terminology, clear framework once understood. Keycap 4 chart example scenario. Imagine prices ranging. There are equal highs at the top. Price action trader break above highs, right pointing arrow, buys breakout. SMC trader waits for price to sweep highs, right pointing arrow, sharp rejection, right pointing arrow, enters sell. Same chart, different interpretation. Here's the reality. SMC is not magic. Price action is not outdated. SMC is actually an advanced form of price delivery understanding. And guess what? Order blocks. They are just refined supply and demand zones. Break of structure? That's classic market structure shift. Liquidity sweep? That's stop hunt plus false breakout. Different language, similar foundation. If you're a beginner, start with price action. Master structure first. If you already understand structure well, then explore SMC to refine entries. But don't jump into SMC without understanding basic trend logic. That's where most traders fail. Instead of choosing sides, combine them. Use price action, right pointing arrow for direction, SMC, right pointing arrow for precision entry. That's powerful. If this clarified the confusion, comment below, PA or SMC. What do you use? And if you want a live chart breakdown comparing both, hit like and subscribe. I'll see you in the next one.